And it's a rainy Thursday morning here in Lagos. Welcome. This is Business Morning. I'm Ladi Williams.
Good morning. I'm Ini John Mekwan. Welcome to the show, where we start with the federal government, which has restated its commitment to the growth and development of micro, small, and medium enterprises through effective implementation of policies and programs. According to a statement by the Minister of Industry, Trade and Investment, Ambassador Miriam Katagun, the move by the government will reposition MSMEs to compete globally with their counterparts, as well as contribute significantly to the nation's gross domestic product. The minister stressed that Nigeria's SMEs contribute nearly 50% of the country's GDP and account for over 80% of employment. The minister added that in order to achieve sustainable growth and development of MSMEs, the federal government had recently approved a revised national policy on MSMEs, which would provide a framework to resolve the challenges faced by the sector.
And the Executive Secretary of the National Sugar Development Council, Mr. Zach Adedeji, has assured that the backward integration program for the nation's sugar industry will address the soaring unemployment level and other socio-economic issues bedeviling the country. A statement by the council today says the Nigeria Sugar Master Plan, as presently structured, has what it takes to provide direct and indirect jobs for millions of Nigerians, both as skilled and unskilled workers. He reassured the investors in the sugar sector of government support in terms of policy and technical assistance, while urging them to redouble their efforts in the implementation of the BIP for the sugar industry as Nigeria moves to attain self-sufficiency in sugar production.
Well, Ladi, the MSMEs are getting a lot of attention.
Oh,
and
yes.
We're going to be discussing with the DG of Smedan today about the
Exactly.
revised national policy.
Yes.
So
it's about time they get the attention, because these MSMEs have been struggling for a while now.
And
so
if they have the potential to create more employment, and we're talking of, unemployment in the country, then, they deserve the
boosting
attention.
our GDP.
Well, away from them for now, Zenith Bank is partnering with the African Continental Free Trade Area to build a trade hub to connect traders in the continent. The Group Managing Director and Chief Executive Officer of Zenith, Mr. Ebenezer Onyagu, revealed that the bank's annual export seminar, while explaining the successes made by the bank in promoting non-oil export. The seminar is an initiative to deepen the discourse on promoting non-oil export businesses in Nigeria.
The need to diversify the economy amidst the dwindling fortunes of crude oil continues to evoke discussions on ways of moving away from fossil fuel. Beyond its investments, Zenith Bank, through its export seminar, provides the platform for discussions on non-oil exports in Nigeria. This year's virtual edition focuses on the role of intra-regional trade and non-oil export initiatives in enhancing Nigeria's economic prosperity.
Zenith Bank has already extended a hand of fellowship to the African Continental Free Trade Zone in supporting the initiative in building a bigger and more diversified, inclusive African market.
The president of African Export-Import Bank, Professor Benedict Orama, and the Secretary General of the African Continental Free Trade Area, Wamkele Mene, explore various non-oil export potential and how the African Continental Free Trade Area can help Nigeria actualize them.
The AFCFTA will, for instance, offer Nigerian products and services preferential access to the huge African market, which currently sources over 84% of its products imports from outside the continent.
With its sizable low to semi-skilled labor and appropriate policies and incentive systems, Nigeria can become a hub for labor-intensive manufacturing in Africa.
The initiatives being put in place by the CBN.
The governor of the Central Bank of Nigeria, Godwin Emefiele, explains steps taken by the CBN to expand trade in Africa.
We have set up a 500 billion naira non-oil export stimulation facility currently domiciled at the Nigerian Export-Import Bank. And we would like to use this opportunity to encourage Nigerian businesses to please tap on this available facility at single-digit interest rates, not only for the good of our people, but also for the export, to boost our export opportunities.
The webinar also features a panel of professionals and practitioners in the trade and export ecosystem According to Zenith Bank, the yearly International Trade Seminar is part of its contribution to trade development in Nigeria, as it has provided a platform for canvassing and initiating trade policies.
Well, like we said, the MSMEs are getting a lot of attention these days, and there's a newly approved revised national policy on micro, small, and medium enterprises for 2021 to 2025. The policy has the objective to address the challenges of financial access to create, operate, and expand viable MSMEs in Nigeria. There are over 40 million MSMEs in the country, employing about 80% of the country's population and contributing about 50% of the country's GDP. Well, to make doing business easier for them, the Director General of Msme, Dr. Umar Diko Rada, is here to tell us how the revised national policy will work. Good morning, Dr. Rada, and thank you so much for spending this time with us this morning.
Good morning. Thank you for having me.
Yeah, you're welcome. So the objective of this revised national policy is to address the challenges of financial access to create, operate, and expand viable MSMEs. What's the strategy to achieve this? Because we've had a lot of talks about doing this thing, but what's the strategy with this revised national policy?
I thank you so much. I think the national policy, reviewed national policy came at the right time when the country is really in need of the economic development and activities in our nation. But I'll just take you through the national policy because the national policy came into being in the year 2007. And then just to enable us have a policy, national policy that will help the development of MSMEs in the country. And it has the capacity of being reviewed in every 4 years. Fortunately, the fourth review of the national policy came in 2015. And then later on, the second review, which we now launched last week, I think was done. We started it in 2019, but due to COVID-19 pandemic, we had an issue. We couldn't finish it at that time because we need to validate it through the use of the stakeholders, engaging them, getting their views on the national policy. But we are lucky that it has been approved by the Federal Executive Council last month, and we have the new document now. And we have changed a new strategy on how we should ensure that we have implemented the policy to the best we could, and then it could be a document that will help in the development of MSME in the country. Part of the major strategy we put in place to make sure that the policy is implemented fully is we have developed an implementation matrix, and this implementation matrix, they have an actionable plan, and then we also have a strategy as well as a time frame to ensure that at every level we have one thing or the other to implement. And then secondly, we recognize the fact that partnership is the key in making sure that the national policy is fully implemented. As you are aware, we have the National Council on MSME, which is a national body chaired by Professor Osibanjo, who is the vice president of this country. And the essence of the council is to ensure that and to review the performance on the implementation of the policy on quarterly basis. And membership of that group includes the CVN governor, the Naxim Bank, BOI, BOA, all the other institutions that are responsible for the implementation or one way or the other has to do with MSME development, including SON, NAFDAC, and ITF. We equally have Ministry of Works, Ministry of Finance. We also have Ministry of Science and Technology, Youth and Women Development. These are some of the membership. And then representative of the Governors Forum, who is also a member of that MSME Council. And we equally have a replica of that council in all the states of the Federation. So far, we have inaugurated about 23 of those state councils. The ones that are remaining, we are making effort to ensure that those councils, they will be responsible, they will be like a committee responsible for the implementation of the review national policy. And it has a timeline. and we have a feedback that we give to the National Council and the committee so that they will review the performance of the implementation on the national policy. And we equally recognize the fact that we cannot implement the policy without partnering with the state, without partnering with the local governments, also equally partnering with business membership association like Msme, NASI, and the rest of those AWEF and the rest of associations. And we equally recognize the fact that all the local and development partners has to be embedded into the plan so that we ensure that implementation is done at the right time and as it is planned. And equally, I want to also assure you that we have seek and we have gotten approval of the ICR, that is the ICR in collaboration with other international partners to train and build capacity of our staff to ensure that this policy is fully implemented for the benefit of Nigerian MSME as well as for the development of the economy of this nation of ours, especially at this time. And you know, in reviewing the policy, we have to put into consideration so many changes that took place within these 4 years. And these changes include macroeconomic policy trust embedded in the medium-term economic plan. And also we have to consider the economic growth and recovery plan of the government from 2019 to 2020, various intervention by
Dr.
CBN,
Rada,
including Anchor Borrower. Yes, sir.
Yeah, so sorry to cut you there, but the reviewed policy has split the micro-enterprises subsector into 2 subgroups, like the nano and the homestead and the micro-enterprises. What's the essence of this split, and what's the expected impact?
I think the major changes in the reviewed policy is the classification. First of all, we have changed the classification of the macro enterprises into 2 classes. Then we have what we call the nano, and we also have the macro enterprises. You know, before, we consider the fact that most of these macro enterprises, about 87.3% of them are mom and pop enterprises, or I can say they are very tiny family-owned businesses that have a turnover of less than 1.2 million. And then they also have employment level of just 1 to 2 staff. So we consider the fact that we should classify them to a more formal macro enterprises. These more formal macro enterprises who have the turnover of 1.2 to and above annually, I think there is need for us to separate them because these ones are more formal than the other ones that we call mom and pop enterprises. And then we classify them into 2 categories. The first category is nano. This nano is the one who has a labor force of only 1 to 2 persons, and then they have a turnover of less than 3 million. And then we also have macro enterprises, and these macro enterprises are those ones who have a workforce of 3 to less than 10. Then they also have a turnover of 3 million to less than 25 million. Then the other ones, small and medium, still remain the way they are because they have a staff strength of 10 to less than 49, and equally a turnover of 25 million to less than 10 million, or less than 100 million. And then we also, the macro are the ones who have a workforce of 50 to less than 200, and then the turnover of 100 million to less than 1 billion. So the essence of classification, change of the classification, is the recognition of the fact that we need to separate these tiny and mom and pop enterprises to a more formal enterprises so that it will give the government opportunity to separate when there is intervention of any nature, to separate this kind of intervention to target different classes of the macro businesses, because you know the government has already underlined this kind of separation through the intervention that was given in the last 2 years, trader money, market money, is all targeting these mom and pop enterprises. So there is need for us to separate this kind of, and also in line with the global best practices. When you compare with other countries globally, you see that there is this kind of separation that is existing. So that is why when we said in Nigeria, we have more than 41 million MSMEs in the country. Some people tend to wonder, why are these 41 million? But majority of these are mom and pop enterprises. So there is need strategically separate these enterprises into. And then the major shift, again, apart from classification, is the change or shift from asset-based to turnover. The reason for changing from asset-based to turnover is due to the fact that there is depreciation. From the 2013 survey that was conducted between Smedan and MBS, it indicates the Naira exchange at that time was 155 to $1. But in 2020, the Naira exchange is 360 Naira to $1. So it invariably means the value of 1 Naira in 2013 and the value of Naira, the Naira in 2013 is value in 2020 is 40.79 kobo. So there is need for
Dr.
us
Rada,
to change that, and then the introduction and the coming up.
All right, Dr. Rada, we know you have
Yes.
a whole lot of information, but, you know, we have limited time, so we have to get in as many questions so as we can get more information. So now it's a new normal with COVID-19, you know, and the businesses operate not like they used to before COVID-19. Now, with this revised policy, what consideration does it give to the new normal, which is what COVID-19 has brought, and how does it help? I mean, apart from the recategorizing of the MSMEs, as you have said, what help does it give them? What impact does it have on them, especially with the new normal?
You know, the COVID-19 has really introduced the use of information technology as much. Technology has become a very means of doing businesses in this country. And then I can say that the MSMEs are more exposed now to the more technology, the way of doing their businesses, and hence that was the reason why Smeden introduced so many apps to ease off this situation. Part of what we did was, you know, Smeden provide capacity building for the development of MSMEs in our nation. So we introduced a digital academy in which people from the comfort of their houses, in their rooms, in their offices, they can be able to get entrepreneurship training of any kind they needed online, and they get their certificate online so that they build their capacity to enable them to develop their businesses to the highest level and in quantum with the global best practices. And part of it, we have also created a marketing app in which if you have your product, you can put it, and people who want to buy, you can transact businesses and then get the value for your product. And also, we have introduced a machinery app. This machinery app, it allows our local fabricators and our partners to key in what they produce to enable the MSME to buy the light machineries they needed to develop their businesses as they have. So I think that the coming of the COVID-19 has really introduced a more easy way of doing business, use of the social media platform, use of internet to buy and sell, order your goods and services, has really helped the economy and has really helped the businesses without much suffering, without much expense, and it has cut the cost of selling our goods and services to the customers. And I think we quickly took advantage of that. And the classification has also considered the introduction of the pen tech technology, in which you see a one person who is doing an information technology. He may be having 1 or 2 person, but you see his turnover is running into hundreds of millions because of the information technology. So I think this came at the right time, and Nigeria is really Nigeria is really catching up, and the Nigerian MSME are really catching up
Dr. Rada.
towards the development of their technological skills.
All right, Dr. Rada, thank you so much. A lot of information there. We do appreciate your time on the show. Dr. Rada is the Director General of Smadan. Thank you so much for joining us today.
Thank you so much.
All right, we'll take a moment now. This is Business Morning.
Welcome back, well, to the commodities update market now. But we'll start with oil. Oil prices fell for a third day on Thursday as a surprise build-up in the U.S. crude inventories and a resurgence of COVID-19 cases in India and Japan raised concerns that a recovering global economy and fuel demand may slow. Brent crude futures fell 57 cents to $64.75 a barrel in early trade, following a drop of $1.25 yesterday. U.S. West Texas Intermediate crude futures were down 58 cents at $60.77 a barrel after losing $1.32 yesterday. Both contracts dropped more than 2%, closing at their lowest since April 13. They're down more than 3% so far this week. The Organization of Petroleum Exporting Countries and Allies, led by Russia, are heading for a largely technical meeting next week in which major changes to policy are likely to be one of the discussions. Well, we'll go deeper into the commodities market now with Damilola Kimbami. She's a head of research in financial derivatives company. Hello, Damilola. Thank you for joining us again.
Thank you for having me. Good morning.
Yeah, so before we go into all the commodities and all that, the Senate has approved the request by the president for external loan for financing the budget. And we've discussed a whole lot about the debts portfolio, the debt stock of this country. And then when you add this, what do you think?
Well, basically, last year in May, the president had submitted the request for the Senate to approve its external loan of $1.5 billion and 995 million euros. And basically, what it's for provide funding for states to help them in their fiscal recovery plan and also as a COVID response. And these loans are concessionary loans, so they have very low interest rates. So definitely they would add to Nigeria's external debt, which as at the end of December 2020 was around $33 billion, the external debt, while the total debt, domestic and external, was about $86 billion. So, but like I mentioned earlier, because they're concessionary loans and there's a moratorium and there's a repayment period, so it doesn't really have that much of a significant impact aside from adding obviously to the debt stock profile. And Nigeria has a low debt to GDP rate presently, and if you compare it with its African peers like Ghana, Zambia and Ethiopia, the IMF has already rated these ones as at high risk of falling into a debt distress. And for instance, Ghana, now we know recently this week Moody's affirmed Ghana's rating at B3 and affirmed and its outlook at negative. Meanwhile, Fitch rated Nigeria at B, and we have a stable outlook. So for Nigeria, we are at least in a better position in terms of the debt to GDP.
Should we be going to that direction?
Yes.
Should we be heading there? Or should we just hold our break before we get to
the
that
major
position?
issue actually when it comes to debt is comparing it with your revenue. So what's our debt service burden? That's the major issue right now. Our debt service burden is extremely high. Most of what Nigeria earns in terms of revenue is used to finance that debt. So that is actually the cause of concern. And that threat is there, but compared to our peers, obviously we're yet to reach that precipice of probably falling over. And like I mentioned, our credit ratings are still relatively okay, because one thing countries look at they're careful about is any downgrade of their credit rating, because then it makes it more difficult for them to access international funds.
So looking at this now, let's look at the latest data from the MBS on the average fare paid by commuters for bus journey, which increased by 4% month on month, and 82% year on year in March 2021. And this happened at a time when we have oil prices going up, PMS, price of PMS, and we have the issue with
the talks, the
federal
subsidy.
government. So it's not looking good, really.
It's not. And first of all, like if you looked at like you rightly mentioned, the year-on-year figures were significantly higher, and that was because this time last year there was a lockdown in place, so movement was restricted. But now with the return to normalcy, with more people going to work, so that demand has increased, and obviously coupled with the fact that oil prices are increasing, the naira too has weakened. So all these factors have obviously affected the landing price, or landing cost of fuel, which has increased about 216 naira per litre. So all these have obviously had an impact or filtered into transport fares. And we know that the transport fares, they account for about 6% of the inflation basket. So that seems marginal, but then still, once anybody hears that petrol prices are increasing, everyone increases that price. So the impact is much more than the 6% that it accounts for. And we know that right now, core inflation, which is headline-less food inflation, is close to 13%, and there's that possibility that it might continue to increase because of the fundamental factors that we've all been talking about, plus seasonality. So the impact is significant, and right now the NMPC MD has said that we shouldn't expect any fuel price hike in May. But when is that going to happen? If we factor all that in, definitely is a cause for concern.
Yes, cause for concern, because I mean it's like becoming a norm now. We have to wait. Okay, so for May we can we can breathe. But what about for June? The talks has been on for how many months now? You know, how is it going to end? You know, and for how long will the NNPC be able to pay about 100 billion naira every month?
With the monthly assurance.
Yes. I think it's more about when it's going to end, not if, because definitely, like everyone knows, all stakeholders involved know that paying subsidy is no longer sustainable because of the government's fiscal problems. We just talked about the Senate approving the external loan. It's basically, obviously, to fund the fiscal position. The states too are struggling. Revenue dropped in January, and despite the fact that even oil prices have been increasing. So definitely, it's something that has to be done. It's just a matter of when, not if.
So help us to understand from the figures from the NBS, you know, said that some states have very high fares like Zamfara and Bauchi and Ekiti, while in states like Oyo and Borno and Abia, they have the lowest fares. So is it because the PMS price there is lower, or how do you explain that?
The disparity?
Yes.
I don't think there's any correlation to the numbers, because for instance now, if you looked at the transport fares in terms of by waterways, for instance, now you find out in the north where they don't really have access to waterways, obviously because it's dry and whatnot. Obviously the cost of the waterways are higher compared to have here. And more importantly, if you even look at the Okada figures, year on year, the numbers spiked by over 100% compared to March last year. And for instance, in Lagos, we know that Lagos states that there's a ban on the use of motorcycles, which are commonly called Okada. There's a ban on motorcycles in certain parts of the state. Yet still, we're seeing that increase in the fares. And that's because what we've seen, they are easier, that one of the fastest means of moving from one point to another. So that's why we're seeing that increase in demand. So for the states, yes, we see some states experience that. And again, the states that are the ones that are embroiled in so much insecurity and there's no movement like that. Obviously, the demand for transport in those states will be low compared to other states where there's still some semblance of calm and peace.
And we also have increase in prices of air travel.
Yes, because again, like I said, that return to normalcy. So, you know, initially, because of the lockdown, and even when the lockdowns were relaxed, people are still a little bit uncertain about the COVID protocols. But now, as more people are basically letting go of restrictions and whatever, you see people flying somewhere. The increase in demand definitely will push airfares. More importantly, jet fuel. Jet fuel also, because of oil prices, obviously as oil prices increase, it will affect transport fares.
Okay, so moving away from that now, the CBN has appealed to exporters to repatriate their export proceeds. Will this appeal produce the desired result? It's an appeal from the CBN.
Oh, well, I think it's just a follow-up of what the CBN did in January, because remember in January, the CBN came out to state that exporters that fail to repatriate their proceeds will be restricted from banking services. And what the CBN is just trying to basically encourage that repatriation and basically basically FX. Right now, external reserves so far in April have been increasing, apart from the most recent data released by the CBN yesterday that showed a decline. So cumulatively in April, we have an accretion of about $400 million. So the CBN is trying to boost its forex supply. You know, there's a demand backlog estimated at about $2 billion. We know that recently it's thinking of inviting international institutional investors back in the market, just basically to try and boost the supply. So it'll be good, definitely, if exporters can repatriate their profits.
What do you expect the reaction from the exporters? How would they react to this?
Well, the question you would ask is, why are they repatriating through unofficial, platforms?
Why are they doing that?
It's because, for instance, if the premium at the prior market rate is much higher, because one, I'm not faced with so many cumbersome regulations and laws and whatever. I can easily transact. And if I'm getting more naira for my dollars, I would, as an exporter, would rather just go and do that. So that's why we're seeing some exporters go through their means. But definitely, if we can get more exporters to repatriate through the official platforms, boost our supply. You know, even the CBN also introduced this naira for dollar.
Yes, I mean,
dollar.
isn't that making any impact?
What's the impact of that?
Well, I think to an extent that has contributed, is partly some of the factors that contributed to the increase in external reserves that we saw towards the end of March into April. There's been a constant increase. So we could say that to an extent, maybe that has helped. And as global economies too are recovering and unemployment rates are falling globally, so that means obviously migrant workers are being employed, and then obviously they can remit funds.
So you think it should be extended, the naira for dollar?
If it's having the positive, if it's helping, well, maybe. But I think the issues are more fundamental than that, and it goes beyond the naira for dollar 60-day promo. Yeah. The issues are addressing the exchange rate dynamics and having a flexible exchange rate instead of what we have presently, which is a managed fixed rate.
All right, let's look at the domestic price movement. See, Gary, rice, flour, all up right now.
Yes, because, well, planting season, so it's to be expected that prices will go up because output is constrained, then plus insecurity, plus the forex issues, which are also affecting food inflation, imported food inflation. So we're seeing a lot of commodities increase, but there's some that are also declining. So for instance, cement prices are down, and we're in the rainy season, and during the rainy season, you see a decline in construction activities. So that obviously would affect the demand for cement and the price. So, but commodity prices are going to remain elevated at least before we get to the harvest season.
All right. Well, we'll take a time out now.
Thank you so much.
Thank you for
always coming through.
Coming through and giving us the updates.
Thank you so much.
Thank you so much.
Thank you very much.
All right, we'll take a moment now. When we come back, Business Morning continues.
Welcome back. It's still Business Morning. Now we're going to the market. And Eddie, oh, I'm so happy this week. We've had Monday, we had Tuesday, and then we had Wednesday, all in the green. And yesterday was 0.29. The bank stocks are really doing well. Are you sure I would not, take a step into that corner?
I will not ask you to do that now.
Okay, this is not a good time.
Last week, not now.
Okay, so we always buy the dip.
You buy the dip. I mean, Ladi would say in the crypto market, you buy the dip. It's the same thing with the equities market. You buy the dip. Because right now, we've seen gains in that market from the beginning of the week. So if you buy now and then today people sell down, you lose money. So I wouldn't advise you to go
now. Buy now, and I know it will go higher.
Well, hopefully. But the positive sentiment continued in the market yesterday as the index was up 0.29%. We're still in the 39,000 psychological level at 39,128.34. Now, Ini, I also have good news for you. The month-to-date return has moved to the positive territory. We're up by about 0.2%, and this was about from minus 1 point something percent. So for the month-to-date returns, we're now in the positive territory. Well, however, the year-to-date returns are still in the negative territory, but it's less than what we had previously. The equity cap stands at 20.477 trillion naira. Now, volume, value, and deals traded yesterday were lower compared to the previous session. Volume was down by about 29%, 239.24 million units, worth 1.66 billion naira. And all of that was traded in 3,746 deals. But for more on the markets, let's talk to Kayode Olayemi, a stockbroker at CSL Securities. Good morning, Kayode. Thank you for joining us on the program.
Good morning, Eddie. Thanks for having me.
So what we're seeing now in the market, is it merely bargain hunting, or could this be the beginning of a bull market?
What we're seeing was the start of Q1 earnings season. UBA reported, I think, over the weekend, and the numbers were quite good. Top line, bottom line, we saw decent growth year on year. So that was sort of led to the positive sentiment we've seen in the market on Monday, Tuesday, and yesterday. But DTB reported yesterday, and the numbers were sort of weaker year on year. And what we've seen so far in the market has that sort of dampened the sentiment. At the moment, the market is slightly down, particularly the banking sector down about 50 basis points. So that's pretty much what's going on. But because the earnings season has just started, as more companies release their numbers, we'll probably see how the sentiment moves around.
But apart from the earnings that are coming into the markets, what else should we be expecting to drive sentiment?
At the moment, I think it's pretty much the earnings that's the main focus for traders at the moment. The other thing that we're looking at is the fixed income market, which has been the key driver since the beginning of the year. The fact that yields have been trending upwards, that's sort of been a negative for the equities market. But, I mean, if the earnings season sort of goes very well, if you sort of discount what's happening in GTB, I think that should be supportive for the market.
All right, Kaidi, thank you for your input on the program. Enjoy the rest of the day.
All right, thank you very much.
Kaidi Olaimi is a stockbroker at CSL Securities. I will just continue with the market numbers. Now, yesterday, Access Bank was the most traded stock by volume, while GT Bank was the most traded in terms of value. Sectoral performance was mostly positive. Now, the banking sector was up 2.25%. Now, that counter has been driving sentiment in the market since the beginning of the week. Consumer goods was down 0.35%. Industrial goods was up 0.39%. And we saw gains from Lafarge Wapco yesterday, which drove the market. Insurance was down 1.28%, while oil and gas was up 0.34%. At the unlisted securities market, we saw some bargain hunting, which lifted the market by 0.82% at 768.63 points. I will recall that for the last 2 weeks, we've seen that positive sentiment in that market. However, this week, we saw some declines in that space. And then yesterday, some investors took advantage of the declines of the previous day. The market cap was at 546.35 billion naira. We saw about 5.65 million units worth 94.81 million naira traded in 68 deals. The bond market continued its bearish run yesterday as we saw yields expand by about 8 basis points yesterday to about 11.4%. Across the curve, we saw yields expand at the mid, the short, and the long end of the curve. There were 42 deals worth 18.69 billion naira yesterday. For the Nigerian Treasury bills market, it was a bit quiet, so we just saw activity on one of the instruments, which was the 13th May 2021. But for more on the bond market, there was an auction yesterday. So let's find out how that was with Chukwudinwa Okeke, the chief dealer of fixed income at FSDH Merchant Bank. Good morning, Chukwudi. Thank you for joining us on the program.
Good morning. Thanks for having me.
Yeah, so what was the turnout at the bond auction like? And how is that likely to shape trading today and tomorrow?
As expected, we saw quite a bit as per subscription levels, although the 2027's the subscription was well below what was offered. However, on the other two, we saw them oversubscribed, especially on the 2045s, which saw a subscription level of 174.86 billion, against the 50 billion offered yesterday. We also saw significant rise in the stop rates from the previous levels at last month's auction. The 27s, which had closed at 10.5, previously closed at 12.25, while the 2035s that had closed at 11.5 closed at 13.34, and the 2045s, which had closed at 12, closed at 13.85. As regards today, we've seen some shift in yields across board. Yields have actually gone up in the market this morning as trading resumed. And with that, we actually hope to see some demand in the market. These new levels are basically where we are going to be with inflation rising, NCD auction closing higher at every auction. We expect at some point some demand to come back into the market.
All right, Chukudi, thank you for those updates. Chukudi KK
You're
is Chief
welcome.
Dealer of Fixed Income at FSDH Merchants Bank. Well, Ini, you've heard what Chukudi said. Rates have gone up even this morning, so I really don't know what's going to be happening in the equity space because yields are currently attractive in the fixed income market.
I think Olayemi told us that it's not looking very bright this morning, even with the banking counter. I mean, but anyway, there's still time and there's hope, so we'll keep our fingers crossed. All right, so we'll take a break. When we come back, we'll head to London. Well, we'll head to London now for some updates with Juliana Olayinka. Good morning, Juliana. Good to have you again today. So Credit Suisse has reported a pre-tax loss of £593 million as a result of the implosion of Akeng as well. This was expected, but was this much expected, and what's the reaction to it?
Well, the reaction has been quite shocking. It's definitely dominating business news across the world. As you said, 757 million Swiss francs is a huge loss, especially if you compare it to the same period last year where the Swiss lender banked 1.2 billion Swiss francs worth of profit. It's not just the Archegos capital, although this hefty loss for the first quarter of this year is all placed on Archegos capital. But there are twin crises that are currently rocketing the bosses at Credit Suisse at the moment. They were also exposed to Greensill Capital. We've spoken about that quite extensively, which involves the former Prime Minister here, David Cameron. They've had to shut off about 10 billion worth of funding because of their link to that bank. And it just shows just how much Credit Suisse was exposed to Archegos Capital. They were the hedge fund that pretty dramatically collapsed last month. We're also expecting in the second quarter at least £500,000 worth of Swiss banks to be written off of Credit Suisse also. So they have called it unacceptable. Bosses have scrambled this morning. I believe they've raised about 1.9 billion Swiss francs from investors to try and mitigate against some of these losses. But it's still pretty terrible. Since the beginning of March, their share price has dropped by almost 30%. Yeah, pretty terrible. Well, markets are awaiting the decision of the European Central Bank. Any idea what to expect? Well, it's interesting. Last month, Christine Lagarde did hint that perhaps they would be pushing forward some sort of fiscal policy. But, you know, even 24 hours is a long time in the business world, and a month has been a long time. I know we had discussed, it had been pretty well noted that the European Union were well behind, you know, other variable economies such as Britain and America when it came to the inoculation of its citizens. But it has picked up. A lot of that scandal is beneath them. Also as well, in the global north, spring, along with the warmer weather, does bring a fresher outlook. And we have had some pretty positive statements from the OECD and other organisations like the IMF that do believe the bloc is well on the way to bringing itself out of recession. And also the PMI surveys, which give a really good forensic look at just to how business sentiment is. It has been picking up. So the chatter on the bloc is that things will remain unchanged, but we'll have to wait and see until they release their statement. Yeah, we certainly will. But the aviation sector is not waiting because the hitches with vaccine rollout has costed £7 billion more than predicted. Is there any plan to buffer this loss? Well, unfortunately not, but you can imagine the airline bosses are not happy, especially when it comes to Europe and Britain. They've been comparing themselves, well, the Ryanair boss, and we know the Heathrow boss has been speaking a lot, as well as Johan Lundgren, who's the CEO of EasyJet, about the new methods, the vaccine passport. Will they, won't they put them in place? At the moment, it's banned to travel here to the UK unless you have a reasonable reason to get here. And even when they do put out the green light on May the 17th, if it will be that day, there will be a mandatory tests. I think the main issue they're having is these PCR tests. It's typically been really, really cheap to fly from Britain to Europe and some of the most popular tourist destinations. But then if you're a family of 5 and a PCR test can cost you about £200, that's an extra £2,000 for a 5-day holiday. Some people just cannot afford that. So they are still lobbying. They are still trying to speak to ministers, not just here in Britain, but across Europe to try and, you know, mitigate against some of these issues. But we'll just have to wait and see. Another wait and see. Well, I guess it will take a while before the world would stabilize with all the COVID and vaccination and all that. Thank you so much, Juliana. And do take care and get empowered for Ladi. Oh, for me later on today. I'll talk to you later on today. All right, so we have Ladi coming up now at the crypto space. Is it red? Is it green? Ladi, what's going on?
It's not looking so good at this moment. The market is looking quite dumpy, and some traders are reducing their exposure at this moment. Market cap's about $2 trillion, down about 1.18%. 24-hour volume, 189.50 billion, down about 11% this morning. Bitcoin dominance raised from, it got almost to the 49 region, but now it's at 50.27, down about 0.30%. Price of Bitcoin as of this morning, 54,581, down about 1.31%. 24-hour volume, $59.534 billion traded this morning. Ethereum doing okay, 2,479, up about 7%. 24-hour volume, 42.535 billion. Top odds by market cap, BNB down about 3%, ADA down 1%, DOT up about 2.50%. Let's talk to Solomon Amunde, digital market analyst. Hello, Solomon. Great to have you.
Good morning. Good morning.
Good morning. So, Solomon, we've had this TikTok influencers moving the market these days with coins like SafeMoon, SafeMars, with almost $1 trillion supply, going up like crazy. What's happening in that space?
Actually, in a bullish market, we can see almost everything happening in the crypto market and in the crypto ecosystem. So I'm not really surprised, because it was at a moment like this that we saw Dogecoin come out, and so I'm expecting so much more like SafeMoon token to actually come out. So what is actually happening is the TikTok influencers who actually know very little about cryptocurrencies but actually have a very large user base, they are just making use of these tokens to actually generate wealth for themselves, and thereby granting easy publicity too for the tokens. And SafeMoon has been able to capitalize on that, and it has done very, very well. And based on SafeMoon, we have seen so many clones of it: SafeMars, SafeWars, Elongate, and so much others. And no doubt, people are actually making funds from it.
Okay, so where do you see this going, this new trend?
Okay, I have taken my time to look at SafeMoon. SafeMoon, the CEO, comes out, and yesterday he had an AMA, and he's doing pretty well. And I've looked at their algorithm. It seems fair, and they seem pretty decent, and they've locked up over $250 million worth of BNB on PancakeSwap for over 5 years. So that makes sure that there's liquidity for those buying SafeMoon token. They won't be left stranded with no way to convert their SafeMoon back to cash. So for that, it's fair. But for the other projects that want to capitalize on what SafeMoon is doing, like SafeMars, Elongate, and so many others, for those ones, it's extremely risky, because people can be victims of what we refer to as rug pull, where you buy tokens that you can't exchange for cash tomorrow. Even if your $100 is worth $100,000 tomorrow, you might be left with tokens that you can't exchange for cash.
All right, Solomon, thank you so much. We'll keep watching all this SafeMoon. Hopefully, it's really safe at the moon with SafeMoon. Thank you, Solomon.
All right, thank you.
Yeah, that's it.
Yeah, safer to go with SafeMoon, right?
It's not. It can't be that safe.
Well, these things are risk, and if you don't have the appetite, just stay away from it. I think that's the bottom
Do your own
line.
research.
Yeah. All right, so that's it. Thank you so much for joining us this Thursday morning. It's been Business Morning, and I'm Ini John McQuarrie.
And I'm Ladi Williams. Thank you for watching.